Hey guys, it's Crossroads here. Today I wanted to look ahead at SoFi earnings, which is next Tuesday morning, coming up very soon. We'll talk, of course, about this on FinTech Fridays coming up this week, but I wanted to give you a little taste. I think these numbers are going to absolutely blow people out of the water. They're going to mostly, you'll see a couple of exceptions, be absolutely incredible. Now, part of that is, to be fair, although hold on a minute, I'm not being bearish, is that this comes against a very weak year over year comp. Right there, we see that it's a lot weaker, significantly so. You can look at net income in the same way. It was very weak, but that doesn't take away from how good these numbers really will be, I think. So I'm looking at a 45.7% year over year revenue growth. 45.7%. Now, if it wasn't against a weak quarter, it would still be amazing. So that's what's really special about these numbers. So, where am I coming from? What is SoFi guiding for? And what do analysts expect? Well, let's take a look first and see what analysts are actually expecting for this. So, this is on Yahoo. There are some different analysts on each one, but overall, there's actually not nearly enough analysts covering SoFi, sadly. There hopefully will be more in the future. To 13 right now, just doing the quarter two, 18 now in quarter four. There are some new ones that are actually really awesome, like Devin Ryan. Check out what he has to say on the stock. But we can see the average estimate is $804.52 million in terms of revenue. Now, you might say that sounds really low, but wait just a minute, because we have the actual guidance from SoFi themselves. And SoFi says, okay, adjusted net revenue, 805, which would be a 35% year over year gain. Really, really good. What do we know about SoFi? SoFi always sandbags. Now, the only number they don't actually sandbag is the tech revenue, but everything else, when they guide for it, at this point, you can almost just count on it being higher, and in some cases, which I think will be the case here, markedly higher than what they're expecting. So SoFi is saying 805. You can't get too mad at the analyst for the average being right there at 805 as well. Yeah, there it is. Of course, the high estimate is 821. My number is 870 million. Yes, 870. That's a lot higher. Usually SoFi beats, but maybe not quite by that much. But there's a few reasons why I think that's going to happen. But first, let's look at net income. So net income we're looking at specifically, well, so the analysts actually don't show us what their net income is. It's implied though through the EPS. But we can see EPS expectations is 6 cents pretty much across the board. There are some that have revised up, down, everything in between. That happens normally. And we can see with SoFi themselves what they're projecting over the course of the year. Diluted EPS of 28 on the high side, 27 on the low side. And we can really see here the diluted EPS is that they're projecting really 6. They'll probably come just north of that at 7. You might say, well, you had a huge revenue number. Why are you only at 7? Well, we'll get to that in just a moment. So in net income, I have $87 million. So it's a bit north of where they expect here, but not by as much as perhaps you would think. Okay, so as far as members, we're looking at member growth, and it just continues to go up and up every single quarter. They do have some attrition as well, but I'm talking about new members specifically of 830 million. It's a slight acceleration over the prior quarter, but I think that they're going to continue to grow. This is an environment where that high and differentiated interest rate is certainly attractive. They also have some specials for brand new people as far as depositing, putting your direct deposit on there and making that basically your main bank account. And honestly, it's a really attractive tech suite. It's my bank. I enjoy it. I don't have any plans to leave. And yes, I'm a Robinhood shareholder, but I'm probably not going to go for Robinhood Bank. SoFi is just too good. Has too many great tools. So yeah, they're going to go around 830 million. They could even beat that. I don't think 830,000, not million. I don't think that this is the 1 million person quarter. Maybe quarter 3 or quarter 4 when football season has fully ramped. We'll have to see that. But this will be good, but maybe just not as good as some people are expecting. Now, on the revenue breakdown side, I'm not going to show you these numbers. I'm not going to look at like the individual subsegments. This is very much napkin math. I'll just be honest. But based on remarks from the C-suite. So lending, I have 435 million. Net, 102 million for tech. So lending is up a little bit quarter over quarter sequentially. Tech is actually pretty much flat, and it has been flat in terms of revenue for a while now. A lot of that is because they're losing Chime. Now, they lost Chime They kind of alluded to that in comments that Crystal Point made in the previous quarter. Now, we found that out a short while after. It wasn't a surprise. They weren't trying to shock us, but that's why they guided for a very low double-digit growth to teens in the tech platform. May actually be south of that as well. Now, Chime, it looks like that they started rolling off their credit accounts, and their debit accounts looks like the next thing that they're going to do. And so they'll be on Chime Core instead of Galileo. So I think there will be a very small decline in tech, even as lending ramps. This is an appetite, or this is a environment where there's a lot more appetite for lending as rates do soften in some areas. And for some others, they're just persistent, but the consumer is very thirsty for loans right now. You can see it in pretty much every which way, including advertising, including the ads that SoFi themselves are running right now, and also comments that they made in Q1 and also later in Q2 as well. Now, related to lending, of course, is the loan platform business. So this is their most exciting and rapidly growing product. In my mind, it just helps SoFi so well. And as there's a greater appetite for lending in the face of rate cuts, of course, student loan default is also another factor out there. They will probably spin off quite a few other products on their loan platform business. This is no risk at all. It's just pure upside, although it is a little bit lower margin. And so that is the reason why, if you look at the net income and you're like, well, why do you have a little bit lower net income despite the revenue? It's a little bit lower margin, this type of product. And I think that's really one of those things that is fueling their growth. So I have $375 million for financial services, which is up from 303 just last quarter. A huge leap, just a tremendous leap if they actually pull this off. And negative 42 million for corporate. That's the average over the last 2 quarters. Again, napkin math, that number can really jump around. And so that can make this look stupid either direction, just because the quarter looks very different for whichever reason. There's several reasons for that. So as far as what does that do for SoFi and the stock, you might be wondering. This is one where I'm not going to make a joke and be like, yeah, it's going to 11. I'll save that for Friday, guys. But no, I think seriously, when a stock grows, especially in a credible, well-known name like SoFi, at a 40% year-over-year rate or higher, and we're looking, if my numbers are right, 45.7, say they don't do that. Maybe they do 41 or 42. People aren't going to be like, oh, yeah, but it was a weak quarter and a weak comp. They don't do that. Instead, they're like, okay, this is a high growth stock. I'm paying attention to the first time. And what people will see when they look at SoFi, maybe for the first time or the first time since it was a SPAC, is a diversified, incredible business with massive tailwinds, credible leadership, and a whole lot of upside, especially as rates fall. It's not the only thing, but the consumer is healthy and in a good place. These are good times for almost every single segment of SoFi. I think even next year, we'll see that increase in the tech platform. So I'm really excited, and I'm excited that I think a lot of other people will take a look here at the first time, and that's going to drive up both institutional buying and also retail buying as well. So I would expect, this is just for fun, don't put money on this, never bet earnings, frankly. I don't, and I don't think that you should either, but you do what you want with your own money. We might see like $28 after earnings, 28. So that's flirting right there with the all-time high. Now, anything can happen. Macro can fall apart. Things can look really bad. There could be yin carry trade day, whatever. But barring that, if they put up the results that I'm saying, I think 28 is actually pretty reasonable, and we could see higher beyond that. I'm not trying to pump the stock. I mean, a short squeeze could happen, but I'm not trying to trigger off a short squeeze. I'm just saying be careful with covered calls on that day. Not financial advice, but man, I'm probably not even going to sell covered calls into this. So that's what I'm seeing with SoFi. Now, let me show you just a couple of comments here by Crystal Point. This was at a fireside chat by Mizuho. This was actually the best one of these. So if you only have time to look at one of these on the Quarter app, it's free, not a sponsor. Just download it and you can search for these. It's an amazing resource for investors. But they had amazing fireside chat with Mizuho, and Dan Dolev has some great questions on macro. Q2, he said it was building on Q1 with really good momentum. Loan platform business, they expected to be a $1 billion business on an annualized basis. Look at notice comments as well in Q1 at an earlier fireside chat as well. They're ramping this, and they're ramping this very quickly. Just in Q1, huge amount of contracts signed, securitization, Student loans, that's more of a next quarter thing, but there is going to be some acceleration here. Tech deals, that's further out than this year, but 2026, yes, maybe even a little bit earlier than that. And of course, crypto stuff too. But the big story is that loan platform business, which will dramatically accelerate financial services, even more so than it was doing before, and lending a little bit as well. There is some revenue from lending on that, although most of it does go to financial services. So that's where I have it. 45.7% year over year revenue growth, phenomenal outperformance, ridiculously so. We know that it's going to be good. We just don't know how good, but I'm looking forward to this one. Anyway, thank you guys for watching, commenting, and subscribing. Till next time, happy investing.